Okay, welcome everybody to Wall Street Reporter's next Super Stock live stream. First day of December 2021. We are in the countdown to the new year, and I think 2022 looks like this is going to be shaping up to be a transformative year for Organic Garage. This could be one of the big plant-based stocks for 2022. So with that said, Matt, welcome back.
Great to be here, Jack. Thanks for having me.
Absolutely. Now, just for anybody that's brand new to the program, our goal is to bring you those stocks which have that 10x to 100x upside potential. Companies that have three things going on. One, they're going after massive multi-billion-dollar market opportunities. They're at a key inflection point right now in their growth cycle, and there are multiple catalysts, multiple paths to get to that 10x to 100x upside. Organic Garage has all three things going on. Matt, a month ago you debuted on our program, and you have two businesses really. They're synergistic related. You have the organic food stores, Organic Garage, which is the basis of the business that's doing 30 million plus ballpark, and you're scaling that business. But I think what the market apparently is most excited about right now is the expansion of your plant-based CPG, the branded business, which right now you have its future of cheese, future of butter. It's under the future of cheese umbrella, right? That's the main thing.
Yes.
Okay. So now last month when you debuted, you had zero products essentially. You said, hey, we're going to have this portfolio of products, massive market opportunity. And sure enough, you had zero. Now you're up to three products. You just debuted was the brie cheese. You got the butter. What else? We got the butter. You got the brie.
Yeah. It's exactly what when I've been on the program, we've discussing the growth trajectory of the company yesterday's press release is a perfect example. We're executing on our business plan. We said we had more SKUs in the pipeline. We launched with 2 SKUs of butter, as unsalted and salted. Shortly after we debuted on your program, which was around 3 to 4 weeks ago. And I said there was more SKUs in the pipeline. We were working on a brie, and we didn't quite identify when it would be launching, but we said that we were confident it would be launching shortly. And we're super excited that officially launched this week. It's arriving in stores this week, including Organic Garage, so you'll see it there as well. But
this is just the start. A lot of people don't. Listen, let's face it. 99% of people or 95% of people, they don't even know what brie is. It's a very specialized. It's a unique thing. I think my take on it is your team, these guys are cheese expert. I mean, that's their this is a way for them to show off their skill, basically, to show that, hey, what they're doing here could be as good. It's a new category of cheese. That's what it's a show off piece. The main money, the money maker, the bread and butter, no pun intended, is going to be in the other products. Am I correct?
Yeah, well, there's what you call fast consumables, and butter is a staple, so it's a fast consuming item. But the one thing that I think is important for viewers to understand when it comes to the brie is, while it is a showcase item, it helps gain cachet for the brand. What it also creates is a massive entrance into food service. Because for any restaurant that's doing a cheese plate or anything, they're not putting cheddar cheese on a cheese plate. They're putting brie. Okay, so when you're talking about entrance, so we had a lot of restaurants that said, hey, look, we're super excited if and when you launch the brie, come back and speak to us. And suddenly, and I said this before about partnerships and things that we were working on, I think you're going to see some exciting news coming out when it comes to partnerships on the food service side, that people were waiting for that brie SKU. So it was a critical piece to our growth trajectory in terms of our SKU offering. But when you're looking at consuming trends in terms of analytics, butter far outseeds brie.
I think it's very important also to note here that essentially, you're creating the plant-based alternatives. It's it's going to be really at some point a comprehensive line of plant-based alternatives for the dairy market, the global dairy market. $600 billion. The global dairy market is $600 billion. It's huge. It's butter, cheese, these things are used in everything. I mean, butter is, I mean, you need butter to have good taste, right? Now, in any product, right?
Yeah.
And a lot of people, they can't eat dairy, whatever, for whatever reason. They don't want to, it's a massive market. So it's sort of like it's sort of like an under the radar thing almost. The stuff that you're doing, it could be, Oatly,
Yes.
Oatly, right?
Yes.
Okay, so Oatly, they're doing, I think, what, almost 700 million. They started out of nowhere, and it looks, I mean, essentially, you could be like the Oatly, but of a different, completely different line. It's I think, a more upside than Oatly.
Well, yeah, and there's no denying. I mean, plant-based is growing very rapidly. There's a ton of interest in the space, and you are right. People, assume plant-based and immediately think vegans and vegetarians, but they underestimate. There's a huge component of the lactose-free market. These aren't people that are necessarily vegans or vegetarians, but they're lactose intolerant, looking for lactose-free items, which plant-based items are. So the market potential is only growing as people, are looking to eat healthier, whether it be specialized diets, whether it be you're vegan or vegetarian. And look, the global dairy market is looking for diversification, and plant-based is on the move. And so when you talk about the plant-based butter market alone is a $2 billion a year market worldwide. In the US, it's and when Yossi was on here last time, he mentioned it, the plant-based butter market in the US is, I think, a $350 or $400 million a year market. So plant-based butter alone, because it's a staple, is used as a fast consuming item. And so that was why we launched those two SKUs first.
Yeah. Now, Matt, the reality is, our audience, investors watching this, all they really care about is, okay, what needs to happen for this stock to go up 10x, 100x, right? And the beautiful thing is, okay, the market for plant-based butter right now is 2 billion. Whatever. Now, organic garage or future of cheese, you don't need to hit big numbers to have a 10x in the stock. Now, in terms of, for example, the market, let's say for plant-based right now, butter is 2 billion. And if you got to, I believe if you got to, let's call it even 10 or 20 million revenues in your portfolio, in this across the suite of the plant-based, you're going to have, I think you said 8 to 10, right? The goal is to get to around 8 to 10 SKUs.
Yeah. Yeah. The simple math, Jack, is and why, 8 to 10 SKUs is kind of the goal. And we're rapidly working towards that, which is really exciting. We're up to 3. We have hopefully another SKU we should be launching hopefully before the end of the year, which we're excited about. And we're rapidly approaching that 10 SKU mark coming into first quarter. But the basic math is, if you look at 8 to 10 SKUs and you look on the average turn per door, and so our cases are pack 6, which is a great small pack size. So having a door representing like one individual location, turning 1 case per week, is very reasonable because it's only 6 units per case. If you have 10 SKUs and the average price that the company generates, by selling to a distributor is $5 a unit, okay? And you look at 10 SKUs, pack 6, so $30 a case, and you're turning 1 case per door, and you reach even 500 doors. 500 doors we could easily hit just alone in Canada. Forget about the US. So in Canada alone, so 500 doors, you're an $8 to $10 million a year company. So
it's a very low bar.
And
so
it is. And for your
stores.
viewers, to multiply out, entering the US market and being in 1,000 doors, 1,500 doors, 2,000 doors, with those relatively low turns, you can easily multiply out how the company scales. And it's why I said, from a CPG standpoint, I know everybody's focused on how many, what's your sales and what, but the key thing is setting a sound foundation, which we're doing an excellent job doing, continuing to develop and roll out our SKUs, because from there, it's very easy to scale very quickly. You have retailers here in Canada that you could hit 500 doors just by entering one retailer. And easily in the US, you have local retailers, grocery retail companies that have the footprint to get into that could easily, double or triple that. So that's why I said to scale up on a CPG side, you need to have the repertoire of SKUs to present to a retailer. You need to have a quality co-packer that you can scale with, which we're working towards, which is a key part for our expansion strategy. And once you have that repertoire of SKUs that you can present, it's very easy to scale from there. And like I said, that's simple math. 10 SKUs, pack 6 with an average price to the distributor of $5 a unit, $30 a case coming back to the company, one turn per case, per SKU, per door, and you're an $8 to $10 million a year company. So
Okay,
that's the simple math.
and that's just your CPG business. Okay,
That's
so
just
that
the CPG.
yeah. So basically, okay. So for investors looking at this, 500 stores, 500 doors. We'll use that the industry term. 500 doors is nothing. It's a very low bar. It's I think it's pretty much attainable. It's like if you have good products, and that's 500 is nothing. Just to give people an idea of how big. Okay, I just did a little research. Oatly, one of the hottest vegan stocks. Oatly doing about 700 million revenues. They are in 65,000 retail doors and 60,000 food service. So, and all they have is it's a milk, right? It's like a milk. It's like a oat milk or something.
Well, it's oat-based products, and they're popular, but same thing. It's a fast consumable item, so it's no different than some of the stuff we're working on. But that is a great example. It's not hard to be in.
So it gives people an idea. Like, hey, and they pretty much came out of nowhere. So I mean, you don't need to be in. So if you just got to 500 stores, let's say you get to 1,000 stores, you get to 1,000 stores, U.S. and Canada, and you can go into the U.S. Right? We're going to talk about the U.S. market because that's the big thing everybody wants to know is, okay, forget about Canada. Like, a lot of people in our audience, they live in the U.S. Right? So
sure,
they're focused on the U.S. stock. They want to know, okay, when can I buy this at Whole Foods, at Trader Joe? Actually, Trader Joe's has their own. They don't sell. Okay, so Whole Foods or whatever it is, right? So there's a bunch of these Sprouts Market. So they want to know when they can buy it. So let's say you get into 1,000 doors in the U.S., you're at 20 million revenues, and the market is paying 10x for plant-based CPG brands, right? So let's say you only get to, let's say you only do 10 million by next year. You hit a run rate of 10 million, which is easily attainable. It's 100 million revenues. You divide it by 50 million shares, so that's $2. That's worth $2 just for that business. That doesn't even include, the underlying grocery business, which is really worth right now $2.50 a share. I don't know. The market's really, I don't know. They're under. We're going to talk about what's the path for people to start realizing that stuff. We'll get into that maybe a little bit later. But so really, this could be a $255 stock. And I said that before online, and I took a lot of heat. People think like, oh, this guy is touting, it's crazy. No, it's real. It's a real thing.
The math speaks for itself. The math is very simple to understand. We're not unrealistic. Our cases are not packed 100 units a case where we're expecting retailers to turn that in 1 week. Our cases are packed 6. So minimal investment by the retailer, which builds confidence for the people that we're approaching, where they're not investing in a ton of product. We're asking for a very reasonable turn of 1 case per door, per SKU. Some doors will turn more, some doors will turn less. That's why we just say it's an average. 1 case per door, per SKU, with 10 SKUs, with an average price to the distributor, $5 a unit. Some products will cost less. Some products, like the brie, cost a little bit more. That's why we're just taking a $5 average, and you do the math. Anybody can do it at home, and you're an $8 to $10 million a year business. And so when we talk about the potential here in Canada, you're absolutely right. The U.S. market is usually 10 times the size of Canada. So when you look at the opportunity for the amount of doors that there's potential for, and you listed Oatly as a perfect example, it is not hard to be in a good grouping of doors very, very quickly to scale the company up. It doesn't take years and years and years. The key thing is setting a good foundation, which we're executing on. We said we would be launching more SKUs. We started with 2. We just launched our 3rd. We're going to have our 4th very shortly. And first quarter, the team is working on 4 to 6 more, because the goal was to hit 10, to find a quality co-packer, which we're already in discussions with a few, because we want somebody who can scale with us. We do not want to be a capital-intensive business. We want to streamline, simplify, utilize a co-packer to do the distribution. Let us focus on sales. So run it lean. So there's no capex. We're not building a manufacturing facility and all this other stuff. Leverage a co-packer to scale the business. Get Afram and Craig, the co-founders, out at the forefront, meeting with retailers, selling the product, expand the amount of doors, and the business multiplies from there. So it's very, very simple.
Matt, I think it's. I mean, I think it's really, when you talk about this business, like you really understand. I think it's important for investors, anybody watching, is to really understand. I talk to a lot of CEOs, and there's a lot of plant-based. It's a hot sector in Canada, especially, and look, a lot of guys running plant-based companies. Last year they were doing, I don't know, uranium. Now they were doing, I don't know, sports betting,
Sure.
whatever. Now they're doing plant.
Sure.
But you understand the business. I mean, you've been in the grocery business your whole life. You run. You do 30 million in revenues, so you know what moves on shelves in your stores right now. You really understand this business from the perspective of the retail stores, which I think is such a valuable thing, such a valuable asset for the company. Because you're coming to this from such a unique perspective. It's not like you're like some crazy brand. You just throwing something against the wall, hoping it sticks. You actually know what moves, and you've done what moves in your own stores, what moves in other stores. So
which is why we started with the butter, because it is a gateway to plant-based, because it's a staple. And the reason why we went with brie, like I said, everybody could point to, well, it's kind of a niche item, and why. The simple reason why is it gives us an entry point into food service, into the restaurant sector. And I'm telling you, you're going to see some exciting, partnerships that we've been working on when it comes to the food service side. And brie was a gateway for that. The next group of SKUs will be, in the fast consuming category, whether it could be mozzarellas or cheddars or fetas, to help expand our SKU portfolio, to have some bench strength when it comes to when we want to go out and present to retailers, because not all retailers will pick up on all the SKUs. So having 8 to 10 gives us a broad assortment for those retailers that want to start with a few. Some retailers will pick them all up. So it just depends. But we wanted to have 8 to 10 SKUs. That gave us a sizable portfolio of offerings that we will continue to grow. I don't want to say that we're limited to that, but we felt that was a critical point to work towards, and the team has that as a goal. And like I said, everybody brings something to the table. I bring, Organic Garage has been in business for 15 years. I'm a 4th generation grocer. I'd like to say that I know the grocery business, and so I bring that expertise to the team to let them know what retailers are looking for. Coming up with a 6-pack case was critical for me, because I know sometimes what it's like when a brand presents a case of like 24 units, and suddenly only 6 can go to the shelf. I got 18 units in my back room. My cost to invest or replenish, I'm too invested in the brand. I don't want to be. So, we pay a little bit more for our packaging, but that, ease of entry into retailers with a 6-pack means there's minimal commitment. And for those retailers, I always remind businesses about this, for those retailers that require a free fill, and I know that because that's what I ask for Organic Garage, the investment for the brand being Future of Cheese is now minimal, because it's only pack 6. So we can invest for those retailers that ask us to. So it's a perfect case pack size. And this is what I brought to the team in terms of, my experience over my years of dealing with different brands, to make the brand as attractive to retailers when we're ready to really grow the business. But the numbers that I mentioned, these are not pie in the sky numbers. I'm not saying we're going to 100,000 doors overnight. I'm just saying even 500 doors, which we could attain just in Canada. Forget about the US, but in the US, we could easily do 3 to 4 times that, if not way more. But just 500 doors, we're an $8 to $10 million a year business with 10 SKUs, turning 1 case per week, with an average price to the distributor of $5 per unit. 1 case per door per week gets you $8 to $10 million a year in sales.
Yeah, and I think that really is the path for this. If somebody does the math and understands the multiples, that's the path for this to be a $2.50, $5 stock in the next 12 months. Because again, the market is forward looking. So, by the time you get to that run rate of, let's say, 8 to 10 million, it doesn't mean you're going to do. It doesn't mean you're going to do for the Future of Cheese stuff. You're going to do 10 million next year. It could mean that you're going to hit 800 grand in November of next, whatever the number is. But
you're absolutely right, Jack. And it is important. It is important for viewers to understand. When companies are acquiring other companies, they are looking towards the scalability of the company. And so once you're looking at forward-looking sales, it's easy to multiply out. If you grew from 100 doors to 1,000 doors in 12 months, then somebody's going to look at you and say, well, you can go from 1,000 doors to 5,000 doors in another 12 to 15 months.
Or 65,000 doors.
5,000 to 10,000, it goes from there. So it's not easy. it's not difficult to scale out over a horizon of time how you continue to grow the brand and penetrate new markets. And then you're looking at where you're going to be in a couple of years when companies are evaluating you or investors are evaluating you. So, part of the reason, to go through the math is some people have a hard time understanding, well, this company can only do $10,000 in sales. Well, no, that's not the goal of the company. The numbers that I've mentioned are hard numbers. These are not pie in the sky numbers. They're not unrealistic. We're not saying we're going to be in 65,000 doors in the next 4 months. But what we are saying is we have a path towards growth that is sustainable and responsible. And we have a game plan that we're executing on. And the press release announcing the Brie launch proves that. We said we were going to do it. We launched it. We're super excited. I've mentioned a few other things that we're working on, and then I'm going to be excited when we execute on those, because we will. And so the path is clearly laid out there.
Yeah, I should add also that look, a lot of times we get CEOs on and they give very aggressive projections, and sometimes you have to take it with a grain of salt, right? Like if they say they're going to do $1 billion, they're probably going to do 100 million, but still it's impressive.
Yeah.
Whereas in your case, anybody watching this should realize that you're a very conservative guy. So if you're saying 10 million, I would double or triple that. So that means probably the number is like 25, 30 million. So whatever you're saying, I think people should say that whatever is coming out of your mouth should be, doubled or tripled. That's probably the real number. And
I think the one thing yes, you're right. That yes, it can easily become that. And I think the one thing as well, when it comes to CPG brands, once the ball gets rolling, they have a life of their own and they can grow very rapidly. Because when one retailer picks it up, the other retailer wants it. And also, consumers speak loudest. When they start asking their local retailer for the product because they're hearing about it, they're seeing it in other stores, retailers start calling and knocking on the door. And it's no different. We launched with a very select group of retailers. People started seeing it on social media. People started hearing about it. Suddenly we started getting calls from other retailers who said, hey, when can I get the product? And we say, hey, look, we're being selective. We're rolling it out. We have a methodical way, but great, we'll put you on the list. We announced our second tranche of stores. The snowball continues to roll from there. So things can happen very quickly. So, when I say 500 doors, you are right. It could easily be 2,500 doors, because once that ball starts rolling, when it comes to brands and popularity, things can change very quickly.
Yeah, I want to see if we can get to some audience questions. I want to just ask you two more questions, then we're going to jump. We got some great audience questions.
Yeah, absolutely.
So last week, it was 2 weeks ago, I think we had your marketing guy, Yossi Haber, who basically he's built major brand. He's taken brands exactly like what you have and turned them into 100 million plus revenue businesses with yogurt, like all these different weird categories, like all sorts of crazy niche brand things. So, and he was very, very excited about what you're doing, and he talked about why he's excited. And this, and he talks about the possibilities for you. I would recommend anybody watching this check out that video. And I'm glad we had him. I know he had a cough or something, so he was coughing. But I'm glad we had him on. We're gonna have to bring him back when he's,
his background speaks for itself. So when you're asking for somebody who's looking from the outside in, giving an honest opinion, his honest assessment is very complimentary, but speaks to the strength of the business and speaks to the strengths of the management team. So you're absolutely right. I encourage any viewer to see the interview that we did, because it was he provided some great insight.
Again, so the beautiful thing, to recap, from the investor perspective, the beautiful thing about Organic Garage right now is that the bar, to get to, let's say, a 10X, to be a $250, $5 stock, is low. If you just get to that, 500 stores, which is very easy to do, 8 to 10 products, you'll be at 8 to 10 million revenues. You got the 10X plus multiples. It could be even 20X for plant-based. Plus the retail business, which is 30 million and growth. I think we're going to talk about, so one of the things you announced, was you're starting to scale up the retail stores. You got 4 stores doing about 30 million right now, just in Canada, just in Ontario, a tiny place. And you're going to be scaling that out. You just announced, I want to get a quick update before we get to the questions. We
announced a logo change. We updated our logo, which we took a hard look at all our branding, and as well, we announced with that logo update, because we're we're going to be very methodical in terms of how we communicate to customers and our value proposition. But in that press release, we also updated everybody on the response from our previous press release announcing the markets we were looking in. And our real estate team, who's great. I mean, they're a worldwide real estate team. We're absolutely inundated with sites that they're still sifting through. So we got a huge response to that press release from real estate agents, developers, looking for somebody like Organic Garage to be in their development. So it just re-emphasized and validated my thought process when it comes to the potential for the brand in our domestic market, that we can easily attain 20 to 30 stores in this Ontario market, which is 5 times basically what we are right now. And it's exciting to see that the breadth of sites that we will be able to work through and select from to find the sites that qualify for what we need them to be. But the results speak for themselves. The inundation of sites was tremendous. It was fabulous to see.
And again, that's another path for Organic Garage to be that 10x to 100x stock, because right now you have 4 stores. If you get to 25 stores, and by the way, that's nothing. 25 retail stores in Ontario is a decent sized market. It's like I don't know, Los Angeles. What is it? How many people do you have in Ontario? 50?
Well, it's our largest province, but I always remind people, look, the Toronto,
and that's just one place. It's not even Vancouver. It's not New York.
It's the 5th largest city in North America, so it's not a small place. So we have some dense population, but getting to that 20 to 30 stores is easily attainable here in this domestic market.
And that's okay. So if you let's say you get to 30 stores, which would be like roughly a 6x plus from where you are now. That could be what, 250 million revenues. I think here's the thing. I think if the market, depending on how fast you can do it, if you really got some velocity going, if you can get to those 25 stores, let's say in the next 24 months, if you can do that if you can start, construction, whatever it is, the market would value that at that business at 5x revenues. Maybe that's $1 billion plus. That would be $20 per share. Anybody doing the math based on current share count?
I think the key thing about the growth strategy is to fill the pipeline. And so by sending out that announcement about where we're looking to grow and seeing the response, it allows us to look out at what is available immediately, what is available in 12 months, 24 months, even 36 months, and to fill up that pipeline. And then no different than the CPG company, anybody who's evaluating the company, whether it be an external business or an investor, is going to be able to see the pipeline and extrapolate the numbers from there and see the path for growth. And all we've tried to do is make clear that the path for growth is attainable here in this domestic market. And the response to the press release about the viability of the sites here locally just validates that point. So we're working towards that. And that's once again, that's part of our development strategy.
Okay. So again, bottom line, multiple paths to that 10x to 100x. I know you, Matt, you're a very conservative guy. I'm just, anybody watching, like below the screen, there's a little crawl of all the stocks we've had that have increased 10x to 50x in the last, months, 18, 20 months or so. And I firmly believe that Organic Garage is going to join this pantheon. In a couple of months, we're going to have we're going to have OG at the bottom of that crawl there as up, minimum 1,000%. Because I mean, it's such an easy way to get there. There's so many ways to get. It's an incredible asymmetrical bet right now for investors.
Absolutely.
Okay, let's get to some questions. What do you think? Okay, any financing on the horizon? Are you going to be doing any financing? I think that's the market was very worried about dilution.
Yeah, I've said it before. We are very well capitalized to execute on our short-term business plan. The only reason we would consider a financing if it helped accelerate our growth trajectory, which is beneficial to shareholders. But in the immediate, there's no need for that. We're very well capitalized to execute on our short-term business objectives. Our CPG company, Future of Cheese, does not have any immediate large-scale capital requirements. The company, when we acquired it, came with capital. It still has that capital. And now we're generating sales. So they're using that for their operations. And on the Organic Garage side, we have enough capital based on us, accessing different financing alternatives to execute on at least a few stores in terms of growth And if we want to accelerate that, we would be very selective in terms of, once again, leveraging alternative financing means to not be in a position to over dilute unnecessarily for any reason. So believe me, I always mention to people, I'm the largest shareholder in the company. I'm not interested in over diluting the company unnecessarily. I'm like everybody else, and I don't want to see dilution where we don't need it. So we're not going to do it unless it helps rapidly accelerate our development plans. So nothing in the immediate.
Yeah, I think a lot of investors, yes, or I mean, not even investors, it might have been like some funds out there that, because again, I think in September you did that prospectus thing where you have something on the shelf, so in theory it allows you to raise money for 20. I think is it 20 months or something? It gives you like a 20-month window.
It's 25 months, and so I
25 months.
just remind people, look, it's our job to be responsible. I'm the CEO of the company. I need to be responsible to look out 25 months from now. And so doing it was just something literally to put on the shelf to be ready if we needed it, when we might need it, but not to exercise it immediately. And so a lot can happen in 25 months. And I will tell people, with the volume of sites we saw, at least on the bricks and mortar side for the organic garage side, the potential for rapid growth is definitely there. And so that's something we'll consider, but there's nothing in the immediate. We're very well capitalized. We have some of the highest cash positions we've ever had in the company. And, we're managing things very carefully, very tightly, being very responsible. So there's no immediate, things on the horizon that would dramatically change that position.
And realistically, I mean, I don't want to put words in your mouth, but is it fair to say that there's probably not going to be any financing below $1 or $1.25 a share?
We always, if we ever consider it, we always want it to be the highest price possible. Once again, I mean, all I can say to people is I'm the largest shareholder in the company. I'm not interested in doing anything that unnecessarily dilutes the company at a low price that is not reflective of the value of not only the company as it stands right now, but the future value of the company. So, going to be very responsible when it comes to that.
Yeah, I mean, and just again, Matt, this is just my opinion. I mean, I think the stock right now is worth, minimum $2 a share, and I don't think you should do any financing below, below $1.50 for starters. Just based on what you have, it's like it would be crazy to do anything at these levels. So anyway, there was a question. Let me see if we can I can't see if I could find it. Maury was asking about. Are you going to be doing any alternative? I think he said. Oh, here we go. Will you be doing any plant-based burgers or meatballs, anything like that, or just sticking to dairy? What's the plan? Are you
in the immediate horizon? We see the opportunity in the dairy side. It's a fast-consuming category, usually an entranceway into the plant-based side. But what I have said in the past is, we're always in the market. We're always talking to different companies, and different companies may be interested in joining up with us that have a product already in that space. So a select acquisition could be something that could come across our table that helps us access new categories. The plant-based meat side has seen a lot of growth. And so it's something that we watch as well. But in the immediacy, we see a clear path on the dairy side, butter, cheese alternatives, and things like that we're currently working on, but always open to different things.
Okay. Matt, I want to ask you a very important question. I think people need to know this. Okay, so the idea is, again, the thing that people are watching is, okay, how big and how fast can you scale the future of cheese, the CPG plant-based business? And I think one of the questions is, okay, what is the capacity? How do you scale the capacity? Because right now, I think in order for you to get into the global distribution, to get to 2,000 stores, 500 stores, you do need a co-packer. So can you explain like what you're doing now, how you're going to get the co-packer, what a co-packer is in case anybody doesn't know? Give us that, and what's the path to scaling?
Yeah, very simply.
There's guys who are interested in buying, like you may have a store with 1,000 locations who wants to take on your products, but they're saying, hey, can you deliver 1,000 cases on Tuesday?
We took the approach to manage initial production ourselves. We have good amount of runway here locally in our domestic market to satisfy the SKU launches. We're able to keep things very tight, very controlled in the beginning. But on a parallel path, our team has been working towards interviewing and discussing with several co-packers handling long-term production. It wasn't something we needed to do initially because we knew how we wanted to roll out the products. But finding a co-packer, and basically a co-packer it's a co-manufacturer. They have a manufacturing facility. They produce the items in their facility. They sell it to us, we sell it to a distributor, and the distributor sells it to the retailer sells it to the consumer. And so instead of investing in our own manufacturing facility, which can cost businesses millions, we took the approach of, no, we want to run a lean company. We want to leverage the expertise of a manufacturer who's been in business, who can produce the items, and utilize our management team and the two co-founders to focus on sales. Get them out front with their media connections. I've mentioned it before, Avram Pristine, one of the co-founders, had a very successful show on the Food Network that just premiered over the last 6 months. Greg Harding has been a celebrity chef on the Food Network. They have access to local media, national media, international media. So our goal was to find a qualified co-packer who could scale with us as we continue to grow the business, and especially looking at entering the US market to be able to supply the larger retailers and not rely on a business trying to do it all themselves, which I think is something that we do not want to go down that path. And investors should be pleased because it means that we're not operating a capital intensive business. Our capital is limited. And Jack, we had a brief discussion about this, to the cost of goods. We want to produce a run, that is our investment. We're not investing in a building. We don't have labor there. We don't have, raw goods sitting there. Our investment is the cost of goods for the production run we do with the co-packer, which keeps us a very lean, low capital intensive business, which is how we decide to operate this business from the get-go. And so that's the strategy that we're looking at for our growth.
Yeah, no. So I think the takeaway from that is investors should keep an eye on when you will be making an announcement of a co-packer partner. As soon as that is announced, I think that's a signal to the market. Okay, these guys are ready to scale, because otherwise, why would you do it, right? So as soon as that co-packer announcement comes out, I think that's going to be the next big milestone.
It will, because the co-packer we do select will give us the flexibility to scale with us as we grow. And part of evaluating co-packers is understanding your growth trajectory. What are you looking to manufacture now versus manufacture a year from now, 2 years from now, 3 years from now, and have that scalability. And so we're spending the time. But once again, this is all part of our strategy, was to do a small domestic launch where we could control things as we continue to roll out SKUs, to build the market, to learn as we continue to grow, and in parallel, interview and evaluate different co-packers who can scale with us. And you are right, when that time comes and that announcement is made, it means that we found the person who can grow with us, not only domestically, not only nationally here in Canada, but internationally, being the US. And that will be a prime factor for the person in the company that we decide to work with.
Okay. Last question here. I live in Northern Ontario. Where can somebody buy the products? Because how many stores are you in right now? Let's get an update. You got 3 SKUs. How many locations are you at right now? What do you sell?
Yeah, I mean, anybody can go to our website, where we're continuously updating our store list. Without knowing exactly in Northern Ontario, I'm not 100% sure at this point, but I am excited to say that, part of our rollout strategy is, once again, we will continue to add stores as we grow the domestic market, but we will, look at very carefully launching online as well, which will help us reach new markets before we can access bricks and mortar, nationally or even locally in our province. So I would say, continue to look at our store list on our website, because we're constantly updating there. Look to our social media, because we're constantly showcasing new stores who have picked up on the product. And stay tuned. I am excited to say that we should hopefully have an announcement in the near future about opening up online sales, which means no matter where you live, small town, big town, wherever, you can order products online and get them shipped directly to your home. So that will be a nice bridge before we go and really start to scale and grow with bricks and mortar.
Okay, so last question, Matt. Okay, in terms of news flow that we can expect into the end of the year, we're already December 1st. what kind of news flow can we expect? When can we expect the co-packer to be announced?
Yeah, I think, look, we have some exciting stuff in the pipeline. I mentioned it before. I said our SKU rollout is not ending. So look for additional product rollouts and announcements, which is super exciting as we work towards our goal of 8 to 10 SKUs. But I think you're going to see at least another one in the near term coming out soon. I would also say look towards some interesting partnerships. I mentioned there was a reason why we came up with Brie as our third SKU, which was to access the food service side, because we had a ton of interest from restaurants who were asking us, hey, look, what's a chance I can get my hands on this Brie I've been hearing about? And so I think there's going to be some exciting news that we're going to be able to showcase about some high profile partnerships with some interesting food service partners. And when it comes to the co-packer,
mozzarella, what about mozzarella?
We're working on it. It's, I gotta keep some secrets. But it is something we're looking on. But I would say co-packer, the goal is, first quarter. We understand the urgency when it comes to that. And so we've been in numerous discussions with several co-packers, and we will continue to pursue that and be very selective. But we understand that is something that is important for us to grow. And that is, fingers crossed, something that we should be able to hopefully secure in the first quarter. With additional product rollout. So lots happening.
Okay, and a food service, which means restaurants. I mean, maybe McDonald's, maybe Chipotle. I mean, all these guys use a lot of cheese. I mean, and yeah, so there's massive market opportunities here.
I think on the food service side, it's finding some. Once again, we're very selective.
We haven't even talked about that. Let's save that for the next. Let's save it for the next.
We'll save it. But it's exciting. It's exciting stuff.
I want to give you the full thing right now. Okay, Matt. Thank you. I'll catch up with you in a couple of weeks. Thank you.
Always a pleasure.
Okay, let's get ready for our next exciting presenter. So big things happening here. We're looking forward to our next 10 baggers, 100 baggers. I think we got some here in the pipeline. Let's get ESE, massive news day today. Massive news day. We're going to get Conrad on. So just stand by 1 second. Where is wait, hang on. Let me just get this set up before we bring him on. Okay, this. Okay, ESE. Okay, just one more second here. Okay, and there we go. Okay, I think we're ready. Okay, Conrad, you're live.
I'm always live.
Here we go. All right, let me just adjust my thing. So okay, here we go.
You look good, Jack. Don't worry.
No, not as good as you, especially today. Now you're getting close to that $1 billion valuation. You're going to be like Dan Pena, the $100 trillion man. Very, very, very soon. The building behind you is going to have a big sign, ESE Entertainment, whatever. It's going to be whatever because we might talk about the name change, right? Maybe a more exciting name with all this new stuff. So there's some things to talk about. Okay, I got everything set up on the screen. Okay, just to make sure before we go. Okay, perfect. Okay, I'm gonna do a quick intro and we will begin. Okay. Welcome everybody to Wall Street Reporter's next Super Stock live stream, December 1, 2021. We are back with ESE Entertainment, ENTEF over the counter, ESE in Canada, Esports, one of our most exciting stocks. It was already up, I think 17x. I think we've got another chance for another 10 bagger minimum out of this. There's another double 10 bagger coming up. For anybody brand new watching this, maybe anybody watching this video later, our goal is to bring you those stocks which have that 10x to 100x upside potential. Companies going after massive multi-billion-dollar market opportunities, big sectors with multiple catalysts in place, and at a key inflection point right now in the growth cycle. Of course, ESE is when you first debuted, ESE hit all three, and now it's even the story keeps getting better. So Conrad, congratulations. Today is really, I mean, a major game changer. This is really a transformative day. It's almost like Joe Biden told Obama, "This is a big effing deal," right? That when they passed that healthcare or whatever it is for the American. They don't know, but that was a big announcement. So now this is really a huge deal, huge deal for ESE. It's transformative game. I mean, today's news should really be setting this stock to $5. I don't know why it hasn't moved. I think this short selling, but okay, let's get right into this. You announced the closing. This is not an LOI, it's a closing.
Yeah, it's a definitive agreement with Game Addict. I mean, if you're not entertained, like, are you kidding me? We just doubled our revenue, added an additional 4+ million EBITDA. I mean, read the news release, guys. This is massive. This is a transformational moment in our company, and I can't wait to explain some more. But the team is fired up, man. I'm telling you.
So Game Addict, and we're going to talk about what they do. But okay, the big thing is Game Addict, $24 million revenues, almost $5 million in income. So this is accretive. This is like immediately accretive. This takes you to, I think, $55-60 million run rate. And I'd like to kind of remind everybody watching this, anybody who maybe before seen this before, is when you first came on our program. I mean, in January, you were saying, "Hey, my goal is to get this to step one, 100 million revenue. This is going to be $1 billion company." At that time, you had less than 2 million revenues. Now, 11 months later, 10 months later, you're at $60 million run rate. So you're basically on track, and you might even get to that 100 million. We got a month to go. We got 29 days left, 30 days left. And you never know what could happen. So
I think it's pretty clear you don't bet against my team. We are executing at the highest level. 0 to call it 50-60 million run rate. This is unprecedented on the venture exchange in Canada. This is an unprecedented accomplishment by the entire team. And guess what? There's still 29 more days left in the month, and we're not stopping. Like I said, I've refilled the pipeline. There's 100+ million and still in the pipeline of revenues for M&As. And we're going to be setting new targets in 2022 because that 100 million is going to get knocked down real fast.
But I gotta say, I mean, before we were talking about getting to 100, and again, 100. When you get to the 100 million run rate, the company's worth 10x in the esports space. So right now, with what you have, based on this run rate now, the thing should be 600, 750, maybe even legitimately, ESE should be $1 billion market cap right now, and it could be justified based on the velocity of how fast you went from 2 million to this 55-60 million. I mean, the market pays for speed, right? So, like, again, it's almost like, like that gladiator thing. Are you not entertained? I mean, the market is shocking to me. I mean, this is like, the market was entertained by EGLX, right? I mean, EGLX kind of and actually what you're doing is, it's kind of just the other side of the coin. I mean, they're focused on the media side. You're focused on almost like the picks and shovels side of esports. And the esports business relies on what you're doing, especially with this Game Addict business. We're going to get into all the details. I know people have a lot of questions. We're going to get to all the questions on that, but this is incredible. So, right, I mean, how many shares right now do you, after this deal, how many shares will you have outstanding after this?
Anticipated still under 75 million. Once again, unprecedented. 75 million shares out with a 50-60 million run rate. I mean, we're going to be, I don't know what other word.
You get 2 times revenues, basically. Yeah. You're trying to get 2 times revenues. So this means, wait. So 100 million, you really, I mean, the stock legitimately could be $10 Canadian, minimum $10-12 Canadian. It's not crazy. This is like right there. It's built in. It's like, I mean, if you just like went to sleep for the next year, the stock would be $12 because the revenues would kick in with this new deal and everything. It's amazing. Okay, Conrad, let's get into the details. Enough about. I don't want people to say I'm just hyping stocks here.
Well, but the difference is, guys, you're now stating facts. These are facts. I put out the news. It got approved. These are facts now. These are real numbers. I've said it from the beginning. I'm executing. There's a very common theme that's happening here. I'm coming on the show. I'm stating something and I'm executing it over and over and over again. This is the fourth time now in 1 year, and it's going to continue. The trend's not going to change. A lot of people say, you know, what about timing and what about timing the market? We create our own timing. We're going to build a real business and we're going to get paid for it. And that's the way we run our business. And when you're confident in your company and your business, and now we're headed right towards profitability, you know, I'll wait the extra month or two for you guys to wake up, for shareholders to wake up. But I mean, the time's now. This is ground floor. I keep saying it. This is a ground floor opportunity.
Yeah, no, it's really it's incredible here. Again, you know, you've delivered everything you've said. You know, again, you know, we've had probably 25 companies we've introduced in the last, I don't know, let's say 12, 18 months or so. How many of those CEOs actually deliver on what they say, or a high percentage of it, right? So, and you're basically I mean, you said that you'd get there and you've gotten there. So if you're telling, I think the pattern is becoming clear. Anybody who doesn't see the pattern, I mean, every time you come on, there's a new deal, the revenue, the picture is growing, the value is growing. And I think that at some point the stock now has to catch up, because, you know, last February the stock ran to $4. I mean, look, it might have gotten a little bit ahead of itself. You know, went from 30 cents to, you know, $4 and change, and now, you know, now the stock has to catch up to the news. The stock basically, in order for you to catch up to the fair value at this point, it's got to be a $12 stock price. I mean, anybody who knows anything about esports can do the math. And the crazy thing is this, is with what you have with this, it's a pure play in the esports space, in picks and shovels. In other words, anybody that wants to have exposure to the esports, any investor that wants exposure to, you know, this is the generational sector opportunity that is esports, it's ESE. So,
and once again, we're partnering with tier 1 groups. Game Addicts worked with groups like Roblox, Opera, World of Tanks. These are tier 1 groups that are already heading into the metaverse, like Roblox. You know, they're generating 30 plus million users monthly. So they're acquiring that type of volume, going after that type of user base. This is massive for us. And it's the most exciting part about this deal is this is a marketing engine that's going to supersonic the rest of our assets. And that's what I'm super excited about.
Let's get into that. So let's get into the details of, you know, this the Game Addict business. Okay, what exactly do they do? What does Game Addict do? How do they generate this 24 million revenues, 5 million, nearly 5 million income? What do they do?
So they specialize in a technology that allows them to acquire new users, and typically new users for game publishers. So, for example, let's say Roblox is releasing their game and they want to acquire new users. They would hire Game Addict to go out and acquire those users. Why? Because, as I said, in their database, they have over 30 million users monthly in their database, acquiring up to 300,000 roughly new users monthly. So you could see why somebody like Roblox or EA Sports or
customers. Roblox is a customer of Game Addict.
Correct.
And also EA, Electronic Arts.
In time.
Okay, but Roblox now.
Yes. Okay. Yes. And what happens is these groups are eager to work with quality acquisition groups like Game Addict and bringing you quality game users. You know, it's not just about acquiring new users, but acquiring quality users. So Game Addict prides itself as being the #1 group in the world for user acquisition for PCs.
Okay, so it's really it's I don't want to. It's like a marketing ad tech marketing business, and the beautiful thing, I mean, I can see, I mean, like, it's interesting. Like you've been doing all these acquisitions and people wonder like, what's the common thread? Like what are the synergies? Now with this deal, this is like the keystone. This is the cornerstone, the key. I'm not sure what the right word is, but this marketing piece is really, I think, what turbocharges the whole thing, because it's the synergies you're going to get from this with digital motors. Conrad, we just lost Conrad here. Okay. What happened? Okay. Okay, let me continue. Hopefully he's going to come back in a second. But okay, the Conrad, where can you hear me? Okay, he's MIA for a second. Okay, the bottom line is, I'll just say this: is the marketing business essentially is what's going to allow you to drive new users to the motorsports. Where did he go? Okay, hang on, guys. Stand by. This is live action here. Let me just hang on a second. There we go. Conrad.
Yeah, apologies. We just had a little electricity glitch there.
You got short sellers. You got short sellers, cutting the wire.
Everybody got so excited, the whole thing blew up. I love it.
So I was saying the synergies. Let's talk about the synergies. I mean, I was using my own spin. Like you're in the business. What are the synergies with Game Addict? How can this business just 10x your existing operations? Not to mention the other stuff you're going to be adding on top of it. Like, why is this so important? Having this marketing component, this 30 million massive database here.
Yeah. So imagine our group, right? And we have these strategic elements or group. Let's use digital motorsports, for example. They have a robust e-commerce platform. Guess what? What is an e-commerce platform name? They need new users. They need traffic. Well, we have 30 million a month of traffic. What do you think that's going to do to that platform? We have tournaments, events, rollouts for publishers. They're always asking, can you acquire new users? How can we create a larger database? Well, now we have that internally, and it's at a tier 1 level, and we're very confident that we could execute that at the highest level. And, you're saying, can it 10x our internal, growth? It absolutely can. That's how you scale. You scale via marketing, acquiring new users. And this group they specialize in that. They have their own technology.
That's the hardest thing. This is the hardest thing.
This is the hardest. And guess what? I'm going to give the guys a lot of credit here. They're world-class operators, world-class executives. They are former MIT grads. And, they've created their own software, their own IP.
They're in Montreal, right? They're in Montreal.
They're from Montreal, but they've created their own software and IP in order to execute this at the highest level.
We got to get them on. We got to bring them on with you. Maybe the next time we should have that, because I think they could really go into all the details. And
oh yeah, absolutely. Yeah, absolutely.
I think one interesting thing you mentioned, which was kind of, I don't know if people maybe missed it, but okay, one of the big things that these guys allow you to do is acquire users, right? And of course, acquiring new users is the biggest challenge, one of the biggest costs for the sports betting, iGaming industry. I mean, they're spending, I think in some cases like a couple of $1,000s to bring on a new user. That's, I think, DraftKings or somebody's spending like huge
per user.
Money.
Per user. So you're wondering why there's 24 million of revenue. Do the math, right? 30 million users a month and scaling fast, an additional 300K plus a month in growth. I mean, it's not thousands, it's millions. Contracts are in the millions. Contracts are in the 10, 50, 100K per month range. This is the type of opportunity it is. And you're absolutely right. And it's a great segue into what you said. Everyone's always been wondering, are you guys going to get into iGaming, into the gambling space? Well, guess what? This positions us perfectly for that segment because now we have the capability to work with those large groups and provide real value to the groups like DraftKings, etc.
Or even your own product. Or maybe not. I think maybe you want to kind of stick to the picks and shovels. I don't know. It seems like you want to stick to picks and shovels.
We want to become experts at what we do for publishers and for all the gambling companies too, if that's the direction you want to go into. You
support the back end of the whole esports business. In other words, if somebody wants to invest in the esports space, there's two opportunities. One is they can buy the game, publishers or whatever it is, or a player like ESE, which essentially enables and powers is the power plant behind the whole space.
No, absolutely. And that's, once again, that's the upside. Look what we've accomplished. Look at the strategy, how we positioned ourselves to execute. It's unbelievable. I have to give credit to the team and just our whole M&A team, our lawyers, legal directors. The vision is crystal clear. I put out the vision early, but it's reality now. It's not a vision, it's a reality.
Okay, let's get to some audience questions, and hopefully we'll have time to do that demo. We get it because the video that we were going to show last time.
Yeah, absolutely. Okay, I got it loaded up this time, ready to go.
Yeah, I know it's ready. It's ready actually. It's ready to go. It's locked and loaded here. Cole asking, can you talk about expected organic growth for Game Addict and organic growth overall for ES? Because the big question is, okay, these guys are doing acquisitions. What about organic? How much organic growth is there between digital sports, between this guy, all of your stuff?
This is a great question, Cole, because I always talk about the acquisition pipeline and how big it is. Our organic growth is just as big, and they're executing at just a high level, right? So we're seeing internally organic growth at a 30 to 50% clip, which is very impressive on a limited additional capital injection. So huge growth internally. And the overall group in Game Addict, this is the exciting part. Yes, we get to leverage their new technologies and their expertise, but guess what? They're going to leverage our internal assets and leverage our internal resources, and they're going to scale as well. So it's basically a perfect melting pot where we're just going to be using all our resources in one bundle and just really accelerate this thing. Really accelerate.
It's very interesting. It's sort of like what you're doing with ESE is really, it's very similar to, now this, nobody probably knows it. It's like what Barry Diller did with IAC Interactive, which became a massive multi-billion-dollar company. The guy started with a UHF television station, which did and then it was like, what is this guy doing? And then he added this, then he added that. All of a sudden they got IAC, in case anybody doesn't know. They're massive internet company. They've made billions of dollars. The guy just built an island off Manhattan, this little park island. So he made a couple $100 million. So he made that type of money from this crazy thing. People didn't know what he was doing, and then all of a sudden the picture came into focus. I think now the picture is coming into focus, and I think in a couple of years, this thing, ESE, could be so huge that you're going to donate an island. You're going to make an island park in Vancouver. It's going to be called the Conrad Vasela Park. It's going to be built up there. So
everything's possible.
Absolutely. It is, because look, you said you would do it. You're doing it. It's really an incredible thing. How often does that happen in the microcap space? Rarely. So, okay. Let's get into, let me see. We have any more questions? You know what? Let's do, before anybody gets into questions, I want to play the video here, which is a little demo thing. I think we were going to show, it's amazing. I think, by the way, I don't know why we never showed that digital motorsports. It is incredible. It's on YouTube.
We could show that too. So
my name is Conrad Vasela, and I'm the CEO and founder of ESE Entertainment. Our company prides itself in being a 360 solution for the esports and gaming sector. Today, we're going to have a closer look at our production capabilities. Come join me. This is where the magic happens. The talent, the casters, the analysts, the emotion. It all takes place right here. And guess what? There's more. Let's go. Welcome to the best esports and gaming studio in the world. This is where we host esports tournaments, leagues, and create world-class content for publishers like EA Sports, Ubisoft, and Riot Games. Welcome to Frenzy Studios.
Oh, now we missed the digital motorsports. I wanted to show we got to show the digital motorsports.
We could get that up too.
The cup thing.
That up too. Yeah. 1 second.
Hang on. Yeah, that is amazing because, like, you know, I never saw that before. It's like when people see this.
Look at this. Here you
Okay,
go.
here we go. Okay, hang on.
Into towards Stone Cold around the outside. Joe leaves in the room. Is there enough? He keeps his nose in there. There's a little bit of contact around Snow. There's
This is the cup, right?
Yeah, this is the Digital Motorsports World Cup.
This is not a real. This is all free stuff. This is not the real racing.
This is 100% produced by ESE, top down from A to Z. The production,
And those are all the players. What we see on the top left is all the players in this tournament.
correct.
The top guys. Okay.
The top guys, and you know what's exciting about this is we have the broadcasters, the production, even the skins on the cars. So the branding on the car is also done by ESE. Look at the excitement. I mean, this is reality, right? This is why people are so excited about the metaverse and the opportunities here, because this is now reality. And you quickly see the production capability.
And this is all basically guys playing from home, whatever it is, the part of the digital motorsports. And so the digital motorsports, this acquisition you made.
Absolutely incredible race.
Oh, that's what's his name. That's Niall.
Look at this. Look at the fireworks. Look at the studio, the production.
He's P1 and takes home.
And they're live. There's players that are live in there in the studio.
It's all global. It's all global, right?
It's all global.
It was like Moses in the Red Sea. It parted. I went right down the middle and poured.
So I think that gives you a great idea.
Yeah, we got there's a little bit of a
He
look at
who
this.
punched shall be punted. And
Oh, I think there's a little bit of a delay in the. Okay.
What a brilliant try was that from Sebastian Job. We know how good he is, but to have that issue at the beginning and then
Okay, this
come through
is
at the end and to take that
great
second
stuff.
position,
Great.
finding his way back
So-
to the grid.
So they're doing basically. Okay, so basically, digital motorsports. Let's talk about. Give us a snapshot of exactly what they're doing, so people understand what they just saw on the screen. What is the deal there?
Yeah, and this is what got me so excited about acquiring Digital Motorsports, because they also do A to Z. So they have a 360 solution internally. So they put on their own events. They create the whole idea, the production. They actually provide the hardware, so the actual simulators, the physical simulators.
They sell the hardware, like not
Exactly.
like the wheels,
Everything.
the whole massive business,
And they
the
build
sim
it.
race.
Exactly, and they build the cars. They build custom cars, so simulators, and it's just unbelievable. So now, this is a perfect example of when you take the existing digital motorsports and you combine it with ESE and our production capabilities, you get a world-class event like I just showed you, and that's where, like you said,
And that was the first one. That was the first one they did, right? This is just like it's almost like the first Super Bowl. The first Super Bowl, people were like, it was like an amateur hour, right? And then all of a sudden, it's like a massive multi-billion-dollar business. Of course, now things happen much quicker. I think by next year, this is going to be like you can have ads, banner, sponsors, because you can put ads, sponsors all on all those screens, and it can be seen by millions of people, right? I mean, F1. Give for some context. How big is F1 in terms of viewers, dollars?
It's in the billions, plural, right? Billions of dollars in advertising and sponsorship, hundreds of millions of users. They even have their own Netflix show that's also generating hundreds of millions of dollars. I mean, it's.
I mean, the racer, the Hamilton guy makes $80 million a year. I think so. If a guy is making $80 million, that means there's big money in that sport.
It's tens of billions of dollars, right? The opportunity is absolutely tremendous. and we're at the forefront. We're the digital version. And like you said, how do you scale fast? How do you scale globally? You go digital. And there's a lot of rumblings about, COVID and this. Well, guess what? We thrive during these times because more people are at home, and the digital, we're going to accelerate even faster.
The great thing, again, the sim racing, which is what this is essentially. Okay, so Formula One we know is huge, right? It's a huge thing. It's a multi-billion-dollar franchise, billions of dollars, right? Sim racing, and you kind of talked about this before. I mean, this is for the new generation. Formula One is really like, it's for guys who are like, older than me almost, right? I mean, like old people. Sim racing is for what is it? Gen Z, because that's the new thing. And it's when you have these rigs that digital motorsports, it is just as real. I mean, there's guys who are competing in sim racing. I mean, there's like what do you call it? Pro F1 drivers who are competing in this, because it is just as real.
But this is the
more
exciting,
scalable.
Yeah, but this is the exciting part, and this shows you once again reality of why it's going to scale even faster. It's not just F1, it's NASCAR, it's rally car, it's IndyCar, et cetera, et cetera, et cetera. And you know what? They've already started. NASCAR, sponsored by Coca-Cola and Logitech, that's already begun, right? The rally car program by the FIA, the International Federation of Automobiles, we're a part of that, right? These are massive, massive global rollouts happening digitally, and we're in the forefront and we're in the mix of it all.
Okay, so let's get to some audience questions here. Cole is asking, okay, what's going to be your cash position after this transaction, and will you need to raise capital? I guess he's asking, is there going to be a raise? Is there going to be dilution? Is there a raise coming up? Which I think people are worried about.
Cole, take another look at the news release and read it carefully. Once again, I always have the shareholders in mind. We position this deal strategically so that we don't have to raise again.
So no raise coming up?
No.
Okay, so I think there's a rumor. I think there was a rumor circulating that ESE was going to raise money, and what happens in Canada is anytime that people think you're going to raise money, you got these hedge funds, short sellers come in, they short the stock, and then they try to cover, they knock it down, and then they try to cover it through the offering. So that's not happening. That's off the table.
I would recommend they also read the news release. It's not happening.
Okay. So there's an opportunity for a short squeeze then, basically.
I said, anybody who knows the AMC and GME guys, let's get the apes on board and let's start the squeeze.
Okay, I mean, it's
Elon loves squeezes too. Let's get him. He could sell the short online. We could get some revenue from that.
When are financials coming out?
So for people who don't know this, our year end is actually October 31st. So our year already ended. So we have about 60 to 90 days to present our financials publicly. So we're in the process of getting that done. But keep in mind, it's not going to be included in these revenues, won't be included because obviously it's already December 1st. So it's going to take another quarter or two for those revenues to show on the balance sheet so you guys could see and have full visibility of that.
Okay. By the way, Connor, I got to apologize because I said, I think I mentioned like off the cuff. I said, I think if these guys change the name to something that's more like tech sounding, the stock would be $5. And I think a lot of people seem to be into it. Maybe I don't know. But are you open to changing the name? And because if you had like some crazy like this Game Addict is a great name. I mean, if you had a name like that, I mean, that's a good name. That's a good name. Digital Mode, those are good names. I mean,
I love those names. And like I said, comment below and start sending the names. We're open to it. So anything that's going to make the company better, I'm open to. No one in this company has an ego, and we just want to put our best foot forward, and branding is very important to us. But, some people like it too, right? So we got to take everyone's opinion.
Are we going to $5 before the end of the year in the next 30 days? You know what? I wouldn't rule out. I mean, maybe it's possible because there's enough there. I think right now the stock is worth, I mean, look, I mean, if you're doing, let's call it 60 million, right? Forward looking a little bit, right? 60 million run rate times 10, 600 million. You got 100 million shares out now, right? Approximately.
Yep.
That's $6. So the stock, legitimately the stock could be trading at $6 right now. So, it might be $3, then, in February. I mean, we've seen the stock run very quickly. I mean, it ran from 30 cents to four and change, 15x. So, I mean, $5, I think is, now I don't, if it happens by February, I don't really care. You know what I mean? At some point this could be, $12. Meta Gaming. How do you like these names, Conrad? Meta Gaming, E360verse.
I like it.
You got some stuff. So I think what they should do is they should email you. We don't want to give away the competitive secrets. They should email you directly, right? And you guys get in touch, right?
Yeah, just send it to our IR team, and
what's your email? Conrad, what's your email?
investors@esegaming.com.
Give me a personal email. Don't give me a personal email. What is it? It's Conrad, right? Konrad. Okay. Cash flow. With positive cash flow from DM, that's Digital Motorsports, and Game Addict now, right? Is it possible to achieve positive? In other words, is ESE? When is ESE going to be profitable? When can you show positive earnings? When will you be able to show that?
We were always kind of consistent with the message that we would see break even or profitability in 2022. And I think with this Game Addict transaction, that puts us in a position to execute on that. But you always have to remember, we also want to grow and we want to scale. So we're still in a hyper growth phase. I mean, like we said, we went from 0 to 50, 60. We want to go from 50, 60 to 250. And sometimes you have to really accelerate and reinvest into the company. So that's our growth. That's our growth strategy. And, we're going to be doing a whole corporate update soon too, and highlight some of the things I have in store. And I'm going to have consistent news. There's more and more news coming out all the time. So just stay tuned. We're going to be super active. And I don't care if it's Christmas, New Year's, my birthday, the news is going to keep coming. We're going to keep delivering. We're a 365 days a year, 24/7 company. We're not based on holidays or days off. So you're just going to consistently see news, and just delivery and execution.
Okay. So it's interesting. So now you said you're going to get to 200. So 250 is the next milestone. So because you're already close. You're already close to your first goal, right? 100 is basically for this. So you're almost there. You're probably going to be there. You could be the one more deal. I mean, this is a $24 million deal. Let's say all you need is like maybe one more decent acquisition plus organic, and that's 100 million.
Yeah, don't forget organic.
Yeah, that's
organic growth will surprise you when you start seeing the numbers come out. It's going to surprise you. Okay,
so there's a hint. There's a hint there. Okay, so now for 2022, we're already in the new year. Let's, it's what have you done lately for investors? Forget about like the 60 million. That's okay. Let's talk about the new year, 2022. What's the game plan? We got a guy asking 6 months from now. Let's just say, what's the plan for 22? Can you get to 250 million, 250 million revenues?
Well, I think the viewers have to wait for the corporate update, because like I said, we're going to have some serious news in the corporate update and what we're doing, highlighting our internal organic growth. I mean, it's going to be really, really sexy for investors. So you got to wait for that, and I'll outline it.
Okay, so bottom line is there's some exciting things coming up. Let me see if we have any more questions. We're gonna wrap up shortly. I mean, I want to get these guys from the Game Addict on maybe next week or next. I want to get these guys on because there's gonna be a lot of questions, I think, and maybe they can do demos or stuff. They can show like what they're doing exactly, and we should get also Niall on from Digital Motorsports. He can talk. He can maybe do a demo of the next tournament. I know that. They're going to be doing more and more of these tournaments. Like And there's a lot of revenue potential between ads, sponsors. It's a huge business, huge business. They got the e-commerce side, which I think, from what I understand, is growing.
It's doing very well. Yeah, it's doing very well.
And there's also some blue sky, which we'll probably talk about maybe in a month or two, which is the blue sky of the gaming business, as in sports betting, iGaming, for this Game Addict thing, because this is like a really interesting acquisition here. Okay, any more questions? I think that's it. Cameron, it's okay. So to wrap up, what can we expect next? Forget about 6 months. What can we expect next 30 days? Before the end of 2021, what kind of news flow?
Like I said, we're not stopping. The second I get off here, I mean, you're gonna see news. It's gonna be consistent. It's gonna be every week. Until I'm in this seat, it's gonna happen every week, and it's big news. I mean, I really think shareholders should go back, read this news release again, and realize we just doubled the company. Okay. And then take another step back and read our last news, a multi-year deal with EA Sports, a multi-year deal with Riot and rolling out, their activations. These are 30, $50 billion companies we're signing multi-year deals with. And we just tagged on another, call it 20, 25 million of revenue. This is a ground floor opportunity right now.
Excellent. Okay. Conrad, on that note, thank you, and I look forward to catching up with you and bringing on these the guys in the other divisions probably in a week or so.
Yeah, it would be my pleasure, and I know you guys will enjoy it.
Fantastic. Okay, thank you everybody for joining our live stream. We'll see you in the next one.